All right, let's dive into what was a really fascinating day on the Nifty 50. I mean, it started out looking like another runaway train for the bulls, but then it hit a wall, hard. The whole feel of the market just completely flipped on a dime in just a couple of hours.
And that brings us to the big question, the one that's probably on every single trader's mind right now. After we smashed through a key support level today, has the game actually changed? Are we done with buying the dip and now in a sell the rally kind of market?
You know, this quote right here, it just nails it. What happened today wasn't just a price drop. No. It was a fundamental shift in the market's behavior. The momentum just evaporated. So let's break down exactly how we got here.
Okay, to really understand the reversal, we've got to rewind to this morning. At first glance, it looked like business as usual, with the bulls firmly in charge. But if you were paying close attention, the first little clues of weakness were already starting to show up under the surface.
So the morning session was just a sea of green, right? The price was chugging along nicely in a rising channel, and every little dip was getting snapped up aggressively. Buyers were feeling confident, pushing for new highs. If you just glanced at the screen, you'd think, yep, another monster day for the bulls. But here's where the story gets interesting. If you zoomed in on the price action, you could spot the first little red flag. As the Nifty pushed higher, the candles started losing their power. They got smaller, and you started seeing these long upper wicks. That's a classic sign that sellers are quietly stepping in and soaking up all that buying pressure.
And that hidden weakness? Well, that set the stage perfectly for the main event, the mid-session reversal. This is where the day's story took a really dramatic turn.
Now, before everything fell apart, there was one critical line in the sand. This intraday support zone was the main battlefield. For hours, every single time the price came down to this level, buyers jumped in and defended it, basically holding the whole uptrend together.
So how did it break? Well, it happened in a really clear sequence. First, the sellers pushed the price down to test that support zone one more time. But this time, the buyers' defense just crumbled. The price slipped right through the level, breaking the trend line that had been holding strong all morning. And bam! In that moment, the sellers grabbed the steering wheel and took complete control.
You see, that breakdown wasn't just a technical thing on a chart. It was like a psychological switch was flipped for the entire market. Suddenly, the game plan for the day was thrown out the window. We went from a confident, buy the dips world to a much more cautious, sell the rips one.
And it wasn't just the price chart screaming sell. The technical indicators backed it up too. The MACD gave us a bearish crossover, which basically means the short-term buying energy was fizzling out. The upward momentum was just gone. And on top of that, the price slipped below its key moving averages, another clear sign that sellers were now running the show. All right, now let's talk about the final hours of trading, because this is where we got a huge clue about how traders are positioning themselves for Friday. The way we closed today sent a very, very clear message.
The bulls really had one last chance to mount a comeback and get back above that broken support level before the bell. And they failed. By closing below that critical zone, the market is telling us that anyone who bought near the highs is now trapped and underwater, while the sellers are sitting on profits, feeling pretty confident heading into tomorrow.
I mean, just think about the shift. We started the day with this aggressive, bullish feeling where every dip was a gift. We ended it with widespread caution, where every little bounce looked like a great opportunity to sell or take profits. It was a complete night and day difference in sentiment.
So, after all that drama, what's the game plan for Friday? How do we prepare for what comes next? Let's look at the key levels and the potential scenarios that are now on the table.
Okay, everyone, burn this number into your brain, 25,900. After today's breakdown, this level is without a doubt the next major battlefield for the bulls and the bears.
So why is 25,900 so important? Well, it's not just some random number on a chart. This is a natural demand zone. It's the exact spot where the last major rally really took off from. And you have to remember, the market has a memory. Traders will be watching this level like a hawk to see if buyers show up to defend that launch pad again.
Looking ahead to Friday, I really see two main scenarios playing out. The bearish path, which, let's be honest, feels a bit more likely given the weak close, would be a gap down opening that takes us right to that 25,900 support. The bullish alternative? Well, that would require the market to claw its way back above the support it broke today. If that happens, you could see a really sharp short covering rally, which is when sellers have to scramble to buy back their positions, adding even more fuel to the fire.
So what's the takeaway? How do we approach this setup? Well, the bottom line is, as long as we stay below that broken support,
The playbook is sell on a bounce. The price action around 25,900 is going to be absolutely crucial. For anyone who's a bit more cautious, it might be smart to just sit on your hands for the first 30-45 minutes and let the morning chaos settle down. For now, the overall bias has definitely tilted to the bearish side.
To wrap it all up, if you take just one thing away from today, let it be this. Today wasn't just another down day. It was a structural break. It was a clear, unambiguous warning shot fired by the sellers, telling us that the easy, trending ride higher might be over for now.
And that leaves us with the million-dollar question as we head into the next session, doesn't it? Was today's big reversal just a warning shot of a deeper correction to come, or was this the main event itself? The market's reaction at 25,900 will probably give us the answer. Trade safe, and we'll see what tomorrow brings.